Good morning, students. Welcome to the fourth class of accounts. So, today's topic is provision of partnership. Provision of Partnership Act. Provision of Partnership Act relevant for accounting. Relevant for accounting. It is also known as provision in the absence of partnership deed. Provision in the absence of partnership deed. So these both are the same things. Either of them may be written on your question paper. So provision of Partnership Act relevant for accounting, or the provision in the absence of partnership deed. So we have to study, we have to learn some of the important provision affecting the partnership account. Okay, so starting with the first important provision which can affecting the partnership account is, number one is profit sharing ratio. Profit sharing ratio. So now look, if the partnership deed has not written anything about the profit sharing ratio between the partners, then the partners of the partnership firm share the profit equally. Okay, so if the partners are forget are omitted to record to return the profit sharing ratio between them, so in this case, one of the provision of the Partnership Act 1932 says that the partner share profit share, the partner shares the profit equally among them. And one of the important thing included in this provision is irrespective of their capital. Irrespective of their capital contributed in the firm. Suppose there are two partners A and B. Suppose there are two partners named as A and B. A had contributed 5 lakh rupees into the firm and B only contributed 2 lakh rupees in the firm. So the total capital of this firm is 7 lakh. So in the partnership deed, they both are forget to write the profit sharing ratio. So if they forget to write profit sharing ratio in the partnership deed, as per the provision of the Partnership Act 1932 says, irrespective of their capital, their profit sharing ratio going to be share, going to be equal, going to be share equal. The profit of the business share going to be equal. That means their profit sharing ratio is equal amongst them. Equal means 1:2. So this is one of the important provision affecting the partnership accounts in the Partnership Act. Understood? I think you got this point. Number 2 is interest on capital. Number 2 is interest on capital. Number 2 is interest on capital. So the partners of the partnership firms are not having any right or any interest to claim the interest on capital from the firm. But if the partnership deed having the point in it regarding the interest on capital, then the partners get interest on capital. But if the partnership deed is not, if the interest on capital is not written in the partnership deed, no partner is entitled to get any interest on his or her capital. No interest on capital is payable if the partnership deed is silent on this issue. Okay, so if interest on capital is written on the partnership deed, partners get the interest on capital. But if the partnership deed is silent regarding the interest on capital, no interest will be payable, will be paid to the partners. I hope you got this point. If interest on capital is written on the partnership deed, partners get the interest on capital. And the second thing is, if partnership deed was not including this point, this interest on capital, no partner will get interest on capital. Understood? Okay. Number third is interest on drawing. Number third is interest on drawing. If interest on drawing is not written in the partnership deed, no interest on drawing will be charged by the partners. If partnership deed is silent about the interest on capital, no partners will pay interest on capital to the firm. So, if the partnership deed is silent, no interest is charged by the partners. Understood? Okay. Next, the next point included interest on loan. Interest on loan. This is one of the important points under the partnership account. Okay, so I want your more attention on this point. If any partner has advanced loan to the firm for the purpose of business, if suppose there are two partners named as A and B, A has advanced loan to the firm for the purpose of business. A get interest on loan at the rate of 6% if the partnership deed is silent about this case. So, if any one of the partner, if any partner gave loan to the firm, that partner will get interest at the rate of 6% if the partnership deed is silent. 6% per annum. Partners will get at the rate of 6% per annum. Now, one of the another aspect of this point is, if the partnership deed included interest on partners loan at the rate of 8% per annum, partners get 8% annually. But if the partnership deed is silent regarding the interest on loan, at such case, partners will get interest at the rate of 6%. Okay. Now move on to the next point, or the last point. Remuneration. Fifth point is remuneration for firms work. So if the partnership deed is silent regarding the remuneration for firm work, no partners is entitled to get salary or other remunerations for taking part in the conduct of the business. If the partnership deed is silent regarding the remunerations of the partners, then no partners will get any salary from the firm But if the partnership deed included the remuneration clause, then the partnership firm have to pay the salary or the commission as per the deed to their partners. So these are the most important 5 provisions in the absence of partnership deed under the Indian Partnership Act 1932. So I hope you all get these most important 5 provisions in the absence of partnership. So that's all for today's class. Now we will meet tomorrow with a new concept of the partnership basic chapters. Okay, thank you.